The following content is for educational and informational purposes only. It does not constitute financial advice. Please do your own research before making any investment decisions. Welcome to Debasement Alpha. This week, the global Fiat debasement machine shifted into a higher gear. Japan handed its prime minister a wartime mandate. Trump named his man at the federal Anthropic obliterated $285 billion of software market cap. And one of crypto's founding fathers walked away. Let's break down what happened, what it means, and what to do about it. Prime Minister Samani Takaichi gambled on a snap election and won big. Her Liberal Democratic Party secured a two-thirds supermajority in the lower house, the strongest mandate for any Japanese government since the Second World War. The Nikkei surged to a record high. But the real story is not the election itself. Japan pioneered yield curve control. They were the first major economy to experiment with direct government manipulation of the bond market. And now, with this kind of mandate, Takaichi has the political capital to push that experimentation even further. On the other side of the Pacific, Trump nominated Kevin Warsh to replace Jerome Powell at the Federal Reserve. The initial read was hawkish. Warsh was known as a hard money advocate during his time as a Fed governor. Yields spiked, but within days, the market recalibrated. The consensus is now clear. Warsh will play by Trump's rules. And Trump's rules mean a weaker dollar, easier financial conditions, and continued debasement of the world's reserve currency. Anthropic released industry-specific plugins for its Claude Cowork agent, and the software sector imploded. Thomson Reuters fell 18%. LegalZoom cratered 20%. RELX, the parent of LexisNexis, dropped 14%. $285 billion of market cap evaporated in a single session. And the contagion did not stop at legal tech. Within days, it spread to property services. CBRE fell nearly 13%, Cushman & Wakefield dropped 14%, and then to financial brokers, with LPL Financial sliding 11%. The single number that captures the scale of this disruption, the S&P 500 software and services ETF, has fallen nearly 20% in just 1 month. This is not a correction. This is a structural repricing of what it means to have a software moat in the age of AI. And in crypto, a symbolic departure. Kyle Samani, co-founder of Multicoin Capital, one of the most established institutional players in the space, stepped down on February 5th. After nearly a decade, he is leaving crypto entirely to pursue AI and robotics. When one of the industry's founding figures walks away, it tells you something about where the smart money sees opportunity and where it does not. Bitcoin has fallen roughly 19% from its recent highs and is trading around $67,000. So who came out on top this week and who got hurt? On the winning side, the Nikkei hit a record high on Takaichi's mandate. AI infrastructure companies continue to benefit as the builders of disruption, and gold, the original debasement hedge, remains firm. On the losing side, it was a bloodbath. Software and services, legal tech, property services, financial brokers, and crypto all took heavy damage. Now, what does all this mean? The first ramification is the most important. With Takaichi's supermajority in Japan and Warsh at the Fed, the two largest developed economies are now explicitly aligned on continued fiat debasement. Japan will keep the yen cheap, which fuels the global carry trade, and the US will push for easier financial conditions. This is not a one-quarter story. This is a multi-year regime. The global debasement consensus is no longer implicit. It is official. The second ramification, AI has crossed a threshold. Until now, AI was a rising tide that lifted all boats, especially the companies building it. But Anthropic's Claude Cowork showed that AI can now replicate the core functions of specialized software. Legal research, property analytics, financial planning. If your moat was a proprietary database behind a seat-based license, that moat is evaporating. The contagion will continue to spread. The only companies that survive this will be those with strong enough free cash flow to pivot into the AI arms race themselves. Margins alone will not be enough. The third ramification ties back to crypto. The institutional adoption wave of 2025 brought something the crypto market has never faced before: institutional mark-to-market discipline. When hedge funds and asset managers hold Bitcoin on their books, they do not have the luxury of diamond hands. If prices keep sliding, risk committees force position reductions. Margin calls trigger liquidations. And Kyle Samani's departure is a leading indicator. The smart money is rotating out. If Bitcoin continues to decline, the forced unwinds could accelerate the move far beyond what retail sentiment alone would suggest. Because the global debasement consensus is now official, Bitcoin remains the ultimate hard money hedge over a multi-year horizon. But because of the institutional mark-to-market cycle, we may see significantly lower prices before the thesis plays out. We are watching 3 buy zones. The first is 52,000, the first level of major institutional support. The second is 45,000, a retest of the 2024 breakout level. And the third is 40,000, the capitulation zone where forced liquidations would likely exhaust themselves. Do not rush to buy the first dip. Let the institutional unwind play out. These are the 3 levels to watch: 52,000, 45,000, and 40,000. Each represents a point where the long-term debasement thesis meets short-term institutional pain. Patience is the edge. And before we close, Lenin once said, "There are decades where nothing happens, and there are weeks where decades happen." This week was one of those weeks. A supermajority in Japan, a new Fed chair, a $250 billion software wipeout, and a crypto pioneer walking away. But the trade entries? Those require the patience of the decades. Let the market come to you. That's all for this week. If this gave you an edge, subscribe and share it with someone who needs to hear it. I'll see you next time on Debasement Alpha.